What is NLP market sentiment analysis in AI finance? Imagine trying to understand how investors feel just by reading hundreds of news articles, social media posts, or company reports. That's where natural language processing market sentiment analysis comes in. It is a way for artificial intelligence to automatically interpret the tone or mood of large amounts of financial text data. This data can include news stories, social media comments, earnings call transcripts, and financial reports. The goal is to figure out if the overall sentiment is positive, negative, or neutral. This process helps investors and financial institutions see how the market is feeling about certain stocks or the economy as a whole. When sentiment turns positive, it can lead to rising stock prices and increased trading activity. If sentiment becomes negative, it might signal a downturn or risk. This kind of analysis is especially useful because it can process huge amounts of text quickly, something humans find difficult to do manually. The core of this technology is natural language processing, which allows machines to understand human language. In finance, this is vital because much of the information influencing markets is unstructured and written in natural language. Sentiment analysis uses several steps. First, it cleans the text by removing irrelevant parts like HTML tags or special characters. Then it breaks the text into smaller pieces called tokens, like words or phrases. Next, it uses dictionaries with predefined sentiment scores to evaluate the words or phrases. For example, words like growth or profit might be positive, while loss or decline are negative. Machine learning models are then trained on labeled data, so they can recognize patterns and predict the sentiment of new texts. This training helps the system improve over time and adapt to changing language use. Financial firms use this technology to monitor news and social media for emerging trends or risks. For example, if many posts mention a company's CEO being uncertain or nervous, it might signal trouble ahead. They also analyze earnings call transcripts to gauge how confident company executives sound. This helps traders make faster decisions based on current market mood. Automating these tasks saves time and reduces errors compared to manual review. It also allows for real-time updates, so traders can react quickly to market-moving news. Additionally, sentiment analysis can support investment strategies by aligning them with the current market mood. For example, if sentiment is very negative about a sector, investors might hold back or consider short selling. Tools like ChatGPT, which are advanced language models, can assist in understanding and generating human-like text. They can be integrated into financial workflows to improve analysis and reporting. While image generation tools like DALL-E or Midjourney focus on visuals, productivity plugins connected to language models can automate data extraction and report creation. From an ethical point of view, it's important to ensure that these models are trained on diverse data to avoid bias. Transparency about how decisions are made and protecting data privacy are also key concerns. Overall, sentiment analysis using natural language processing is transforming how finance professionals interpret unstructured text, making market insights faster and more accurate. It helps them stay ahead in a fast-moving industry by turning words into actionable information.